Okay, just a minute. People will get confused. Whosoever will watch this. Dividend. Okay. So if you see the discrepancy in the dividend amount, so it might be where you can see the tax rate will apply. And as you know that, so custodians, they are responsible to manage the tax payment on behalf of the government, right? So they actually work for the government as well, so they help as a tax collector. So it means they collect the tax on the investment and they send it to the government. But if you see the discrepancy between two, custodian statement and your accounting system, so you need to reach out to them, because this is a Bloomberg screenshot, right? Bloomberg screen, where you can check this on a Bloomberg screen as well. But if there is no your system and the Bloomberg, which is means they are in a line, but the custodian statement, that is not in a line, which is you can see the difference, right? So on a custodian statement, let's say the amount is 0. What is this? .3. So which is the possibility of net rate, right? And this is a gross. But once you do the proper investigation and send a mail to the custodian or to the internal client, so depends. As I mentioned, if you have access, then you can directly send a mail to custodian, right? Or else you can send a mail to the another escalation point of contact, so he or she can escalate that matter to the custodian, and they can definitely come up with that. Yes, so the rate has been applied to the dividend, and that's what. So we have recorded only net rate, which is 0.3, and the tax that is confirmed, which is 0.1. So if you see, your total would be again 4. But after that, as I mentioned, you don't need to do anything. See, as an accounting team, there are models, which is if you're working on end-to-end models, then you will have to amend your dividend accounting system, which you can update the dividends and the tax rate especially, and then that accruals will be flow in that direction. Otherwise, your job is to report it to the dividend or income processing team. They will update the tax rate in their system, and after that they can even process it, where you can see your accruals will match, and even though your cash payment will also match after it. So this is a part of like investigation, recon, break resolution, reporting action, you can say anything, that depends. Okay. And so every day for a XYZ fund, what we do, we run the dividend report. Okay, depends on the system, which accounting system that you're using. So you can run the dividend check, or even though with a few institutions I have seen that, so clients send a mail to us in Excel form, right? So which you can open and validate that with your system, because security details will be set up in your, or will be there in the system, would be there, will be there. But you need to verify that with the report that you have received, and especially because we consider the dividend by X date.
The dividend report, right?
Yeah, dividend report, due report. Yes, exactly, due report.
And Shradha, if you don't mind, can you just also start with the basics as well, like what is record date, what is pay date, just so that I can just.
Okay, X date. See, in a corporate action, what happened, I'll tell you. I think we have seen, or no, I don't know, just a minute. I have one diagram. If you want the benefit of corporate action, okay, if you want the benefit of corporate action, you need to trade the securities before the X date. X date, it means it can be any date. Okay, X date means it can be any date. Who can announce this? X date will be announced by the stock exchange, and the record date will be announced by the company. So it means it can be any date. But If you want the benefit of corporate action, so it's your responsibility to place the trade before the ex date. So you can check that information on a stock exchange, NSE, BSE side, where under the corporate action sections, where all the corporate action details is prevailed or exist or available. You just need to go there and check it. Even though you can verify these details or ex date and all with a Bloomberg statement as well. So this, because announcement date, on announcement date, company confirm the ex date, record it and paid it. So after announcement, you can plan it out. If you are a fund manager, you can plan it out if you are looking for a dividend benefit. That's what we call like event driven investment strategies. Event driven. If there is an event, so you can design your investment strategy and accordingly you can place the request. But if you want the benefit of this corporate action, instead 8871, let's say the ex date is today's date, or let's say 19, I know it's a market close date, but I'm just considering for example 0. This is your ex date, so it means we need to do the trade or place the trade today itself. By today end of the day we should trade in the security, right? Then only we would be able to get the benefit of corporate action. What about recorded? Recorded, it means eventually it's a settlement date. So trade should be settled on or before the recorded. On or before the recorded, it means this settlement date. And this date, you can just add the actual settlement date. Actual settlement date would be your record date and your trade. So it means whenever you place the request for a trade, that should be settled on or before the record date. Only after that, your positions will be entitled to get the benefit of corporate action. If you don't follow this rule, you cannot expect the benefit of corporate action. While doing the accounting, it's your responsibility to check whether the fund is holding the security on the ex date or not. If it is not, then your positions that will not be entitled to get the benefit of corporate action. But make sure that positions should be available on ex date. So it means ideally that the security already traded or already placed the request for trading, right? That's what you are holding the security on ex date. But if you hold the security on ex date, that the security will not capture on ex date, correct? If you buy the security tomorrow, then the security will not be captured on tomorrow, and tomorrow is the ex date. So it means if you want the security should be in the books of the fund by the ex date, then it means the security should be traded today itself, by hook or by crook. Simple. Right? And if you do this, then your positions will be there in the books of company on the record date as well. Record date called, so we have several names which we call to the record date, which is accounting date, book close date, right? Then actual settlement date that we called, but all are like same. It's a record date, or maybe you can say actual settlement date, that's fine. So in short, your position should be settled on or before the record date. We have this example. Let's say the ex date is this, and if you place the request right on the ex date, and still if the security gets settled on actual settlement date, whatever the settlement date was defined on that date, the position has been settled, but still your positions is not entitled to get the, or your positions are not entitled to get the benefit of corporate action. Why? Because the rule which is that we have, this is a centralized rule, okay? Security should be traded before the ex date, but here you have traded the security on the ex date. See this. This trades that we considered as an invalid failed trades. Invalid failed trades. In such a case, your positions are not entitled to get the benefit. But instead this, if you buy the security on x minus 1, so it means here, and if the security settled here, in that case your securities are valid, and definitely the corporate action team will process the dividend to you, means to your securities. And that's what we follow, the ex date procedure to consider the accrued dividend. If you're holding the security on ex date, so it means your positions are entitled, and that entitlement we call it accrued.
Right.
And that's what your accounting entry come into picture. Accrued dividend to dividend receivable, and then cash account debit to accrued dividend, so that you have received accrued dividend amount once you received cash payment on payment date. Even the corporate action team, they also carry that is as accruals, right? Because every team they are expecting accrual payment, that's what they also calculate as consider as accruals. And after that, after payment, they call like journals. Journal has been posted. If you join any corporate action team, so you can see this. So we call it prepayment, we called accruals, post payment we call journals. Why? Because we have processed the accruals to you. So now that the accruals has been posted to the journals, or now you have received your cash, so fund accounting teams or different accounting teams, they can calculate the benefits or calculate their cash payment against the accrued, match it, then understand, and you can do the further accounting. Alright, so this rule is important. You may definitely in fund accounting interview, you may expect 2 to 3 questions on corporate action part. So the ex date, it means again, if we discuss little bit more about ex date it means, so we can say without dividend. Okay, so why without dividend? Ex date we can call without dividend. Why without dividend? Because if you put the trade on ex date, then you are not entitled to get the benefit of dividend or corporate action. That's what we are saying. Ex date, it means without dividend or without corporate action benefit. Simple. But before the ex date, so that is like come due period. From this announcement date to till the ex date, means before the ex date, I would say 8806. 8806. So this period means since 7/31 to 07 to till 886. This duration we called come due. So it means if you place the trade during that, so you are eligible for coming dividend. So where you may expect questions on this part as well. What is come due?
Dividend.
Yeah, come due or come dividend. If I draw the chart or the diagram for this, let's see if I can do.
So if my understanding is correct, Shiva, come dividend is the period between the record date and the ex date, correct?
Just a minute, hold on. I'll draw something so which will help you to understand. X minus 1 date. X date. Record date. Let's say the X minus 1 as okay, 6 and 2 1906, and this is like 21. See, this date is your without dividend, okay? And this date we can say come due. So x minus 1, x date minus 1 would be your come due date. If you do the trades, then still you are eligible for coming dividend. You are eligible for coming dividend. But if you do the trades on x date, then you are not eligible because it's a without dividend date. Right? So x minus 1, so let's say if the x date is 19 June and the x minus 1 is 18 June, then at least minimum requirement is to get dividend benefit, you should put the request or do the trades on x minus 1. Simple. X date means x date minus 1. Now we know the x date, right? So before this you should, before this date you should do the trade in that particular security. Simple. Now you can ask your doubts.
What is the other period called between X date and record date?
Ideally the period should be 2 days, right? X plus 2 would be recorded. So x plus 2 day would be recorded, or recorded minus 2 would be x date. Recorded minus 2 would be x date. But this is like a generic rule, but which is not fixed. In some cases where you can see the x date and recorded is same, right? So
X date will be the date on which the stock exchange announces the dividends of the particular shares, right? And record date will be the date on which the company to which the shares belong finally announces it on their books, correct?
Announcement date, see here if you see announcement date, which is something different, right? X date, which is something different.
Okay, announcement date will be just like an announcement that
Exactly. So before that, see, behind every corporate action you can see the setup or process. Okay, so the company reach out to the stock exchange team, they actually discuss with it about the date and all. So do you know how film releases? So they actually go to the censor board, discuss with the date, and then after they announce the date, right? So on which day the film will release across board. The similar way, the same process happened here. So the companies, they reach out to the stock exchange, ask for X date. If their company, the stock exchange provide the X date, then they come up with the announcement date and they announce it. So this should be the X date, this should be the record date and pay date. So accordingly, you can do the trade. So you will be entitled to get the benefit of corporate action. Okay. Any doubt apart from this about this dividend part?
No, but of course, another entry will be actual.
So actual accounting entry, if you receive dividend, cash account debit to dividend account.
Yeah, I mean it will follow the same principles, right, of real accounting.
Yeah, there is the income, it's an income. If it is accrued, then you need to follow the accrued rule. If it is prepaid, then you need to follow the prepaid, because we have discussed that. And if it is a cash that we have received, you need to follow the cash accounting. Simple. So we don't have any other treatment apart from this, and even we don't follow. Okay, about interest payment. So I'll check it if I have anything. 2 for 1 stock split. Okay, spin off. Is this one corporate action details or amount to be raised? Public transaction. See, on a fixed income instrument, let's say bonds or debentures, all right? So here you can see So settlement date would be there, okay, for all the bonds or fixed income instrument. So here also we follow the record date. On a settlement date, there should have a securities in the books of company, then only your securities will be entitled to get the benefit of interest payment. Interest payment, so it means dividend, interest distribution date would be your settlement date. So there should be security exist or prevailed in the books of account on the settlement date, right? Then only your security will be entitled to get the benefit of interest payment. See, that date we can call dividend distribution date also. Interest payment distribution date, not dividend, by mistake. Interest payment distribution date. Okay, so one.
That will happen exactly on the settlement date.
Yeah. Wait a minute. Let me check something. Shit. See this. Your interest payment also will be start to accrue from the settlement date. Interest accrual date, settlement date. See this. Your actually coupon will start. Coupon, it means your interest payment. Coupon, it means interest payment. It's nothing but the interest payment. Interest payment which the issuer company commit to pay. Fixed percentage or floating, depends. Fixed or floating, either of the one percentage would be there. Maybe frequency would be quarterly, yearly, or at the time of maturity. Depends, because a number of investment themes that you can see with the fixed income instruments. So depends on that. Even though compounding simple, there are a number of other theories as well. But the point here is your accrued interest will start from the settlement date of the security, right? And then you can start to accrue the interest payment in the books of fund as well. The same entry that we can prepare, accrued to accrued interest receivable. After that, once you received, cash account debit to accrued interest. Here on a screen of Bloomberg, or maybe in your system as well, your system actually carry each and every calculate each and everything. But just to have again to confirmation, you can also do the manual calculation in the Excel sheet, right? The formula which we have, which is actual days divided by 360 days or 365. But most of the institutions, they follow the actual days divided by 360. So that you can follow the same principle or rule and calculate the accrued interest and update in your books of account. So you don't need to calculate any other things apart from this. And after calculation, you can match your interest payment with the Bloomberg or any market data. Match it and calculate. Okay, even though, why we do this? Because bonds, even the instrument that is a tradable instrument, tradable security. Throughout the year, you can see the one fund sell the securities to other sell the securities to other. Maybe your fund can buy it, your fund can sell it. If you're buying the security, it means you are buying the interest payment as well, right? And that's what clean pricing and dirty pricing come into picture. If you're buying the security, means if you're buying the bonds with the accrued payment, because seller will receive that accrued payment and you are paying that interest payment now. Eventually, there is no loss to pay, because at the time of that the interest payment cycle, that the interest payment will receive to you from the issuer. But before that, you are making the payment to the seller of the security, right? If that security is getting settled with the accrued payment, so that process we called dirty pricing. If you're paying the principal, which is this $1,000, along with that, if you're paying interest amount as well, so it means, yeah, this is a dirty price for you. If this bond is getting settled with only principal or par, then that would be a clean price. For you, it would be clean price, right? So those terms where you may expect questions from a fixed income side, maybe even the calculation part, accounting entries for interest payment, how we can calculate the accruals, put that the 4,000, let's say this is the amount for a year, so that you can do the calculation, which is 4928, this amount, let's say this is for a year, so this amount 4928 divided by 360, so this principal will be already disclosed. So with that help, you can calculate and update it, prepare the accounting entry, update it. Simple. Coupon schedule, coupon period, quarterly, monthly, yearly, all the details that you can check it on the custodian side, as well as you can check that with the other even company side, as well as even though you can check that on a Bloomberg or other data provider or information who can provide information to us about the investment, and we try to match all that information with the system. Coupon payment, which is nothing but just an interest payment. Then you may expect, like, let's say, okay, so we are preparing the accounting entries, we are carrying the accruals and all, then what would be the challenges where we may face in this the recording of interest payment or accounting, or while doing the accounting for interest payment part. See, most of the time accrued interest that doesn't match with the cash payment that we received. So throughout the duration we have, let's say, recorded, which is 1,000 as an accrued interest payment, and on a cash date or payment date we have received only 900. You can see, so here the break, which is the 100. Maybe due to so we have recorded the accrued interest incorrectly due to rate and all, which we picked up incorrectly and all, even though we maybe missed to check with the other resources, that also happened. Or maybe sometime from the other issuer side and all, so they have processed the lease payment to us due to XYZ issues. But in that case, you can check with the custodian, even though you can check with the market, other resources, what is the exact rate and accruals and all. And after that, definitely you can chase to the agent banks or concern, the agency who can help you to get that information about the accrued payment and all. After that, let's say the 900, which is the the correct one, but you recorded incorrectly, then you will have to reverse your all the accounting entries which you have posted. Reverse, for a reversal, you can just reverse the accounting entry. Means, let's say your first entry was in the case where accrued interest payment, account debit to interest receivable, right? So for a reversal, interest payment receivable account debit to accrued interest. Let's say amount was so if you follow this process, then accrued will be offset, right? Debit versus credit, this debit versus credit versus debit, so it means there will be zero impact. and you can reprocess the entry with the 900. This is simply you can process this entry for a 900 only, then your accruals will be matched this. And you may expect question, if you do this, then definitely, let's say you have done this in last month, so it means last month NAV was incorrect then, right? So we don't have any other option, so we cannot go back in past and amend the last month's NAV. So whatever change happened, whatever incorrect amount that we have processed, so that we can adjust in this current month NAV or current accounting period's NAV. So we don't have any other process which we can go back and modify the records and correct the NAV and then we can send the report to it. No. Okay. And apart from that, okay, any other doubt, question?
In this particular thing, no.
Okay, so now I mean you have cleared everything, right, about dividend or interest payment part?
I think I can expect a question also, regarding NAV life cycle. So if you can just give me like a short.
Need asset value, okay, NAV package or NAV fund life cycle, where you may expect questions on this. Fund life cycle. Fund life cycle, start from the investing or to raise fund, I would say, right? So where basically you can link with the subscription and subscription part to raise fund, then to invest, correct? If you invest, definitely, so that the investment will generate some return or alpha or return on investment, correct? To generate alpha, or I would say a return on investment. If you generate, then distribute. And final would be your to return of capital. Return of capital. And lastly, to discharge in the partnership. This is your fund life cycle. Discharge, it means shut down the door of your fund. Simple. Distribute, first of all, return the investment returns, then return the capital, and then discharge it. Because there won't be anything in the books of account, then doesn't make sense to keep that active or open. Then close it. Okay. Then NAV package. Start from subscription, trade processing, corporate action, income processing, fees calculation, pricing, even though redemption part, redemptions of units and all, right? Subscription.
Redemptions will come.
Sorry.
Redemptions will come along with subscription.
Why will come along? It is a part of capstock activity, but that doesn't mean it will come along with it, because redemption happened at last. To return of capital process, it means that is your redemptions, you are redeeming the assets. Subscription, it means you are bringing the capital into the business. It will come along, but that both activities where you can see the difference. Subscription would be at the beginning, where that is like the first time investors, they are sending money to the fund account, and after that, after generation of return and all, after maturity of investment, then you can return that investment. So it means redeem the units and send the money back. After pricing, subscription, income processing. See, even though you can say this, that is like capstock, combinedly say capstock activity, that's fine. So where subscription, trade processing, corporate action, income processing, fees calculation, pricing, redemptions, after that, even though valuations as well, if it is in case of illiquid assets and all, like MBS, ABS loans, in that case, it's an important one that we calculate the valuations of securities, and we do the valuation of securities and do the accounting treatment. Apart from that, you may see the investor allocation, fund allocation, right? So all that comes under your NAV package. That all the input that we require to do the accounting, even though cash reconciliations at banks and all, that also comes under the NAV package. What about accounting then? See, accounting start from recording journal entries, recording of journal entries.
Sugar, just 1 second. Can you go back to the previous slide? Previous slide. What was the last one that you said? So because you listed that the last one. Last point that you said on the left.
Fund allocation,
Yeah.
investor allocation, fund allocation. Okay. Then in a FA accounting means fund accounting process, where you can see the set which is required, recording of journal entries, right? Then posting to the main ledger and sub ledger. So where you can say classification basically. Then summarize. Why summarize? Because after that we prepare trial balance. Then after that you can prepare the final accounting. Final accounting, which start from trading, which gives us the gross profit. So where you can record the all buy and sell trades and all the trading accruals. Most of the time the question has been raised on what is the difference between trading accruals and non-trading accruals. I don't know what is the logic to ask this question, but yeah, if you see any expenses related to the trades, broker fees, custodian fees, agent fees, middleman, any other charges, or if they charge any fees to do the trades in the market, so that fees we call trading accruals. Trading book, P&L. If you are recording any expenditure, let's say admin fees, management fees, office expenses, miscellaneous expenses, promotion expenses, traveling expenses, conference expenses, any expenses, so that all expenses we call non-trading accruals. Non-trading accruals, P&L.
So, tax expenses, that will come under non-trading, right?
Which expenses?
Tax.
Tax, it is a part of P&L, not trading book. Then finally balance it. Right, so where you can record asset and liabilities, and even though you can record outstanding units, formula which is NAV. So most of the people interpret like total assets minus total liabilities divided by number of outstanding units. Assets, liabilities and outstanding units. Apart from that, so where you can record the cash at bank, prepaid expense, outstanding expense, and so on and so forth. After that also means after balance it, you can prepare fund flow statement, so basically this is like cash out and in. If you sell, cash will in. If you buy, the cash will out. So this is basically based on the buy and sell activity, so which can help us to get the need change in cash or fund. Okay, cash out, cash in, fund flow statement. Even though we prepare income statement as well, but there is no difference between the P&L and income statement, but still in a normal accounting we see the difference. Income statement, where you can just calculate or consider the income, net income received from the or received on securities, dividend, or maybe interest payment or any other commission, let's say rebate fees and all. So this is basically when you offer the securities on, or when you borrow the securities, means lend the security, lend the security. So where the borrower of the security will pay the fees to you. So that is again the part of your income. So that you can treat. Okay, so this is all about accounting part. So you may expect questions either of the fund life cycle or maybe accounting. So this you can prepare. Okay, so are you done with writing?
Yeah, just Shivraj, most of this would also be given in the 12th standard accounting book, right? Like the components of the income statement, components of the income account. I mean, it's the same, right? The same logic applies.
Yeah, it's the same. Even though in my several sessions I told to many clients that why don't you refer the 11th and 12th standard accounting book to do the practice for this accounting and all.
Yeah.
See,
I just found my 12th standard accounting book yesterday.
नहीं पूरी टैब चालू है इसको
yes.
Off section, I can refer to that.
See, in a fund accounting, again I'll reiterate the nature of transactions which are new. Nature of transactions which we are not aware about it. Maybe derivatives, maybe investment in equity, bonds, loans, and many others. But the accounting treatment will be remain same. There is no change in it. Okay. So if you want to do the practice on this part, then I would again request you to please refer the 11th and 12th standard accounting books and do the practice as much as you can. Simple. Apart from that, so I would say just go through the derivative as well. Derivative not about types and all, but about pricing models.
Okay. How do I go through the derivative pricing model? What do I refer to?
Refer the CFA, I think CFA.
Book that you mentioned?
Yeah, CFA book. Try to practice sums, right? Would be better. Then security valuation, derivative security valuations for bonds, equity, or any other loans and illiquid securities. If you cover these two chapters, trust me, you can crack any interview. Refer the 11th and 12th standard accounting book, and there's two chapters, derivatives and this security valuations, and you can add one more. So if I just a minute, if I have that, I'll tell you which one. Portfolio management, security valuation, and the first one, which one is, and derivatives. So 4 chapters if you can prepare, you can crack any interview. You don't require anybody's support even. Even you don't require my support also. So what you require is right direction, right? So what topic need to cover, what topic that need to study and all. So I would request you to go through the derivative chapter in details, security valuation, portfolio management, and the fund, that is accounting, 11th and 12th standard. Or even though you can go through the IFRS as well, IFRS principle beginning to end, if you can. Otherwise, that's fine. So because now every institutions, they have a checklist of that the IFRS principles and all. Even though you don't need to follow anything, that everything in the system, you just need to follow the system and do the accounting. Okay,
Yeah.
so I'm done with my session, even and even the recording as well. So what happened to the recording?